What's going on, traders? This is Mike with Tactical Traders doing some end of the day scans today on January the 12th, 2021, and it is 4:20 in the afternoon, so the market just closed. And right now we are looking at ticker symbol CTRM on the daily chart over the last year of price history. And before I go any further, I just want to highlight that we're going to be looking at this from a bullish perspective. This is a penny stock, and I never recommend shorting penny stocks just because of the amount that they can move. The percentage that they can move is just really not worth the risk when it comes to shorting, even though it can be profitable. So anyways, before any more of that, we're just going to look onto the chart, and we do have some lines down here. These are actually from a past video that we did with our members when we first alerted this ticker back around, I believe it was around 20 cents or so. I think actually it was 18 cents, and we're looking for that 20-cent breakout, which we finally have gotten. And over the last year, as you can see, the price has been pretty much going down. And then for the last few months, it's been going sideways, hitting a low of 11 cents. And it started to catch our eye a little bit. From this low, we started putting in some higher lows steadily, creating a nice little trend. And I'm actually going to remove these right now, just so it's a little bit clearer to see. All right, so yeah, so since that low of 11, we've been putting in some of those higher lows. I'm just going to highlight that real quick. All right, so we're just going to connect these data points right here, and as you can see, it's been just bouncing up this trend line, getting nice little gains here and there, day by day. But the big thing about this that I want to highlight is the volume. The volume for the last few weeks has been great, and with a penny stock, volume is key. You are going to need liquidity to trade these stocks. All right, so now let's trim it down to the 5-day, 15 minutes. So let's get a look at how the intraday chart is more looking like. And as you can see, it's been just a little jumpy around, but the last 3 days, again, there's been an increase of volume. And in that increase of volume, we've gone off the low of 16 and put in some higher lows once again. So definitely something to keep your eye on. So now we're looking at, if you're not in this trade already, how can we look at moving this forward, and how can we possibly set up a profitable trade plan? Well, I actually want to go back to the daily chart and just highlight one more thing. As you can see, this 200 SMA, this purple line right here, that's the 200 SMA, has acted as resistance. The price came up, pretty much got rejected at that. It did poke about a cent above that, but overall it traded right down on that. And that's been the most volume, and I think all year, way more volume than anywhere in the year. So pretty interesting to see, a pretty interesting setup. So now, in my opinion, as long as this price is below this 200 SMA, the bulls are not in full control yet. We need to get the price above that 200 SMA. Then once we get above that, and especially when we have a full candle close above that, it can be very exciting, and this can be the potential of a possible reversal. And if you're wondering what I mean when I say reversal, you can always go back to our older videos, such as SNDL. We alerted that back when it was, I believe, I want to say around 20 cents also, and that has ran over $1 now. So we, highlighted that reversal in our past videos. You can go back through our videos to find that one. But very similar setup here. For me personally, 35 is going to be that area of resistance. It's a nice solid number, and it's obviously been the high of today. So right there, 35 cents is our real pivotal point in my opinion. So now going back down to the 5-day 15-minute chart, you can see that we had this nice pop up here, and it actually might be a little bit easier to say once I change the settings a little bit. I just wanted this to be as clear as possible. I'm going to take that off. All right, so here we go. Now this is a little bit more clear. So we had that nice gap up. However, before we had that, we had a nice bounce the previous day from right here around 20 cents all the way up to that 35-cent area, really 34.8, but we're going to call it 35. The price, it did go sideways for the most part of the day, having some intraday support right there around 30 cents and putting in those lower highs as well. But to me, that's actually looking more like a consolidation channel, a bull pole and flag. And unfortunately, towards the end of the day, the price did momentarily drop below that 30 cents. But that doesn't really mean that we are, this pattern is broken. Because if you take another closer look at it, to remove some of these lines just so it's a little bit clearer once again. Right here, we have the 27.5. This was resistance in the past, and this is kind of where the breakout point was this morning. So this price has gone down and pretty much, within a half a cent has back tested that and held it through multiple data points. These are 15-minute candles. So for over the last hour of the day, it did hold above that old area resistance. And that's a great sign for the bulls. Anytime an old area resistance is broken, you do want to see, it's very common to see it act as support. That sign of support is huge for the bulls. It's showing us that the bulls are not willing to let it go below that 27.5 or 28 cents mark. So we can expect, hopefully, to hold this price here and to bounce up back into this consolidation channel and then breaking the 35-cent point. Now, once that 35-cent point is broken, that is for me, that is when I will go in for my long. That'll be, and I'll definitely want some increase of volume at that same time the price action does it. So it just show me that there's a lot of momentum, a lot of strength behind the move, and we don't get caught in a fake out breakout. But yeah, so anyways, 35, the break of 35, let's go long. And for a price target, we're going to actually compare it to our last breakout. So in our last bull poll, we had the move from 20 cents up to 35. However, I like to be a little bit more conservative with these. So instead of giving it a 15-cent range, I'm going to give it a 10 to 12-cent range. So going right now, we're going to say 12 cents. So 35, 12 cents on the range. We're looking at a price target at 47 to 48 cents, which is perfect for me. Because once you get to that 50-cent area, that can be definitely a mental area of resistance, it being a nice solid number. So I wouldn't mind taking my first profit taking area at 47 cents. And when I say first profit taking, I mean 20%, 30%, maybe even half of your position size, if not all of your position size, to lock in some gains, but I don't mind leaving shares there to continue on to give me bigger gains in the future. And if we pull up the yearly again, let's just see if there's any areas of resistance that's pretty obvious. And looking like right there at that 50-cent mark, like I mentioned, it was support here, broke down, then acted as resistance. So definitely 50 cents is our next big area of resistance. But I do recommend taking profits a few cents earlier, maybe 47, 48, just to lock in those gains. All right, traders. Well, I hope you liked this video. If you did, please hit that like button. It helps us out a ton. Subscribe to the channel for more videos like this. And if you want to jump into the live 24/7 chat room with us, you can get access to that through tacticaltraders.com. We are now offering a 50% off for yearly members, and you can contact us about getting the promo code for that. Thank you, traders, and until next time, stay profitable.